All heard about the millionaire next door. There's not a lot of conversation about their kids because a lot of these people are helping their kids with large down payments when it comes time to buy a house. And not only is it something they can do to help them, but it actually mathematically makes sense for them. So I'm a loan officer. I help people purchase homes. And in many cases, somebody will come to me and say, hey, I'm going to buy a house, and mom and dad are going to help me with a large down payment. If you don't know what the millionaire next door is, this is typically somebody that lives in an above average neighborhood, nothing crazy. They have a couple nice cars. Typically, their house is paid for. Typically, the cars are paid for. Maybe they own another piece of property that's paid for. So maybe they have $1.5 million, $2 million of real estate, and they have in assets $2 to $4 million. They've done really, really well in life. They have a ton of savings. A lot of times they're still working and they have regular jobs, but they have money set aside. When it comes to their kids, they think to themselves, well, we're going to help them with a down payment. So if you were going to buy a $600,000 house and you didn't have mom and dad to help, and say you put 5% down, and let's suppose you just have average credit and you are just average job, but you do qualify for the loan. And let's suppose you get an interest rate somewhere in the mid sixes, depending on your situation. Well, now you're going to have a principal and interest payment of about $3,600 a month, just plus or minus a few dollars. Because you didn't do a large down payment, you're going to have mortgage insurance, which is going to run you maybe $250 a month. Let's suppose the property taxes are $500 a month and the home insurance is another $150 a month. So I'm going to estimate that your mortgage payment on that house is about $4,500 a month for the $600,000 house with a small down payment. Now mom and dad come in and they say, hey, you know what? We're going to give you $200,000. We're going to help you save money on your house. And you say, cool. So what actually happens? Well, now the mortgage is not 570. The mortgage now is 400. So your principal and interest goes down to, $2,500 a month ish. Your mortgage insurance goes away. You don't even pay $250 in mortgage insurance because you have more than 20% down. You still have to pay the property taxes and you still have to pay the home insurance. But when it's all said and done, your mortgage payment now is $3,100, $3,200 a month. It's roughly about $1,300, $1,400 less because you got this large down payment, which is awesome. But from your parents' perspective, they're saving you $1,350 a month. And if you multiply that by 12, they're saving you about $16,000 a year. So their return on the $200,000 that they gave you is 8%. They actually, by giving you that $200,000, the return of savings to you is about 8% of their investment. If they put that same $200,000 in the market and wanted to get that level of investment back, it would be a large amount of risk.